Do you review your finances every year? If not, you're missing out on opportunities to improve your financial security and growth. Whether you're building wealth or just getting started, there are key financial decisions you should revisit annually to ensure you're on the right path. In this video, we'll break down the top 5 financial decisions worth reviewing every year. These decisions can make the difference between financial success and missed opportunities. Ready to take control of your money? Let's dive in. 1. Rebalancing your investment portfolio. The first decision worth reviewing each year is rebalancing your investment portfolio. Over time, the value of different investments in your portfolio will change. Some investments will grow faster than others, which can cause your portfolio to become unbalanced. For example, if the stock market has been doing well and your stocks have grown significantly, they may now represent a larger portion of your portfolio than you originally intended. Rebalancing ensures that your portfolio continues to reflect your risk tolerance and long-term goals. By selling off some of your investments that have grown too large and buying more of those that have lagged behind, you keep your portfolio aligned with your desired risk level. This can help you avoid taking on too much risk or missing out on growth opportunities in other areas. The process is simple but crucial. Each year, take a look at your asset allocation, how much you have in stocks, bonds, cash, and other investments, and make adjustments as needed. You want to make sure your portfolio continues to match your financial objectives. It's like recalibrating your financial compass to stay on course. Regularly reviewing and rebalancing your portfolio helps you avoid emotional decisions during market fluctuations, which can lead to poor outcomes. While rebalancing is important, don't be tempted to make changes based on short-term market conditions. Instead, focus on your long-term goals and ensure your portfolio is still working toward them. 2. Reviewing your emergency fund. Next, let's talk about your emergency fund. This is one of the most important financial decisions to review each year because life changes, and so do your needs. Your emergency fund should cover 3 to 6 months of essential living expenses. But what happens when your lifestyle changes? Maybe you've upgraded your living situation, had a baby, or taken on new expenses. These changes can affect how much you need in your emergency fund. It's time to review and adjust your emergency fund if your expenses or family size has increased. If you're self-employed, you might want to aim for a larger emergency fund, 6 months or more, since your income can fluctuate more than someone with a steady paycheck. Having enough funds available ensures you're not forced to use high-interest credit cards or loans when unexpected expenses arise, like a medical bill, car repair, or job loss. Your emergency fund provides peace of mind, knowing that you're prepared for the unexpected. It gives you the financial flexibility to weather difficult situations without taking on debt. By reviewing your emergency fund every year, you ensure it's still in line with your current needs and that you're fully covered for any emergencies that come your way. 3. Adjusting your budget and savings rate. The third financial decision worth reviewing annually is adjusting your budget and savings rate. As inflation rises and you may experience salary raises or changes in your lifestyle, your financial priorities need to shift accordingly. If your budget is static and doesn't account for these changes, you may end up spending more than you should and not saving enough for your future. Start by reviewing your income and expenses. How have your expenses changed since last year? Maybe your rent has gone up or your utility bills are higher. These things need to be factored into your budget. If you received a raise at work, don't automatically increase your spending. Instead, redirect a portion of that extra income into savings or investments. This is an excellent time to automate your savings, so a fixed amount goes into your savings or retirement accounts every time you get paid. Reviewing your savings rate is just as important. The more you save, the more you're setting yourself up for future financial security. Maxing out contributions to tax-advantage accounts like your 401k, IRA, or HSA can be a powerful way to save for retirement, especially with the tax benefits they offer. Aim to save a larger percentage of your income each year, even if it's just a little bit more. These incremental changes will add up over time. The goal here is to make sure that as your life and income change, your budget evolves to match those changes. A budget is not a set-it-and-forget-it tool. It should adapt to your current reality and help you make the most of your money. 4. Optimizing debt repayment. The fourth decision worth reviewing each year is optimizing your debt repayment strategy. One of the biggest financial mistakes people make is failing to regularly assess their debt situation. Without an annual review, it's easy to miss opportunities to save on interest payments or change your repayment approach to pay down debt faster. This oversight can extend the time it takes to become debt-free and cost you more in the long run. The key to managing debt effectively is addressing high-interest debt first. If you're paying 20% or more on credit cards, for example, that debt is eating away at your finances much faster than it should. It's crucial to focus on clearing this debt as quickly as possible because it's draining your resources. High-interest debt, like credit cards, can quickly spiral out of control if left unchecked. To optimize your repayment strategy, you can use methods like the debt avalanche method, where you prioritize paying off the debts with the highest interest rates first. This approach minimizes the amount of money spent on interest and allows you to pay down your debts faster. By tackling high-interest debts first, you get rid of the most expensive debt first, saving you money in the long run. If you need a psychological boost along the way, you might want to consider the debt snowball method. This strategy focuses on paying off the smallest balance first. While it doesn't always save you as much money on interest, it provides a sense of accomplishment as you eliminate debts, building momentum and motivation to keep going. Both methods are effective, but the important thing is to have a plan and stick to it. Additionally, review your mortgage terms every year to see if refinancing is a good option. In a low-interest rate environment, refinancing your mortgage can reduce your monthly payments or allow you to pay off your loan faster. By reviewing and optimizing your debt repayment strategy annually, you ensure you're not paying more than necessary. It helps you stay on track toward becoming debt-free more quickly, allowing your money to work for you instead of being wasted on interest. 5. Reviewing insurance and beneficiaries. Finally, the fifth financial decision worth reviewing every year is reviewing your insurance policies and beneficiaries. Life changes quickly, and so should your coverage. Whether it's life insurance, health insurance, or disability insurance, it's essential to regularly reassess your coverage to make sure you're adequately protected. Start by looking at your life insurance policy. Does it still reflect your current situation? If you've had a child, bought a new home, or experienced other major life events, you may need to increase your coverage. Also, review your health and disability insurance to ensure you're not underinsured, especially if your health needs have changed. Insurance premiums can change over time, so it's also worth checking to see if you can shop around for better rates or coverage. Equally important is reviewing the beneficiaries on your accounts. Have any life changes occurred that should be reflected in your beneficiary designations, such as marriage, divorce, or the birth of a child? Make sure your beneficiary information is up to date, so your loved ones are taken care of according to your wishes. Insurance and beneficiary designations are often overlooked, but they play a critical role in protecting your family's financial future. By reviewing them annually, you ensure that your coverage is still appropriate and that your loved ones will be financially secure if something happens to you. There you go. These are the top 5 financial decisions worth reviewing every year. From rebalancing your investment portfolio to reviewing insurance policies, these decisions are simple but incredibly powerful in ensuring long-term financial stability. By regularly checking in on these key areas, you can make sure that you're always moving in the right direction financially. The best part? These decisions don't require major overhauls to your lifestyle. They're small, consistent checks that help you stay on track. Start implementing these habits today, and over time, you'll see how they can lead to lasting financial security and growth. Before you go, don't forget to like this video if you found these tips helpful. Share it with anyone who could benefit from these strategies, and subscribe to stay up to date on more practical financial advice. Your financial future is in your hands. Take action today. Thanks for watching, and I'll see you in the next video.